You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. Welcome to the show, John.
Hey, Jim.
Gold has suddenly become a hot item again. A year ago, I recall stories that called gold bullion pet rocks.
Yeah, well, that's a sign that the market is about to turn when people start using terms like that. And I remember that from the cycle before, when people on CNBC were referring to it as a doorstop. This was like 2008, give or take, 2007. And that was the beginning of a really nice bull run for gold. So it feels like that happening again, but you can't know until retrospect. You know, we need a solid year of gold going up before we can say it's back in a bull market. But this is a nice start. You know, this is a good bounce off the bottom, and the gold mining stocks have just rocked lately. There's a lot of mining stocks that are almost doubled off their bottoms here, and that's just the beginning. As Rick Rule of Sprott Asset Management points out correctly, a lot of these stocks could double, and then double again, and then double again, and still be below their peaks from the last cycle. So if gold continues to go up, we're going to see a lot of mining stocks behave like .coms. You know, they will just rock it. But again, we can't know whether that's going to be the case for sure until we see a lot more trading history put down here. And one thing to watch out for with gold is that even in strong runs, you know, even when the general cyclical trend is up, it's still a volatile market. And one of the indicators that that give you some sense of what direction the volatility is going to be is the Commitment of Traders report, which tells you what the big players in the paper gold market, that is the guys who play with futures contracts, what they're doing. And there are basically two groups in that market, to keep this really brief. They're the commercials and the speculators. And the commercials fool the speculators into getting on the wrong side of the market every single time. So you can pretty much do the opposite of what the speculators are doing when it reaches an extreme one way or the other, high or low. And you're usually right. And 3 months ago, the speculators were extremely bearish. In other words, they all thought gold was going to go down, and that was a sign that it was going to go up, and it did go up. But now, the speculators are mostly bullish. So that could indicate a correction of a month or two for gold. And again, this has nothing to do with the cyclical bull market that might be starting, but it does have an impact on somebody who's looking for entry points. You know, if you're trying to decide where to do your next buy, then that indicator would say be cautious and patient, because you'll see a better entry point sometime in the next couple of months. Again, this is all just fun to talk about, and probably not very important beyond that, but it is interesting for the gold bugs of the world that the gold is starting to behave well, and it's one of the better returning assets, finally, again.
Is this a good time for averaging? Buy a little bit every month, don't go all in?
For regular people, I think that's always the best way to do it, because markets are inherently hard to predict, and today's manipulated markets are harder than even the old hard-to-predict markets. So the safest way to accumulate something in these kinds of markets is to buy a little bit, buy the same dollar amount each month, let's say. And then when the price of the thing you're buying is down, you'll get more of it. And when it's up, you'll get less. And over time, your average price will be pretty favorable. So I think people who are new to the gold market should approach it in that way. Just, don't jump in with both feet just because it's gone up for a few weeks, because a good month is frequently followed by a bad month. And you'll get a better price if you buy a little at a time. So do that. Don't commit in a big way, because then you'll hate the market. You'll hate the people telling you to buy it. You'll hate the instrument that you're buying if it goes down right away after you buy a bunch of it. So be cautious, be steady, And if you're on the right side of a long, long trend, which I think we are with precious metals, it'll work out in the end.
Precious metals, we've been hearing a lot about gold and silver. What about platinum and palladium?
Well, they are classed as precious metals, but they're also industrial metals. They're used for various things in the economy, like catalytic converters for cars. And to the extent that there's rising demand for those industrial uses, that puts upward pressure on their price. And then people view those metals as kind of secondary precious metals. In other words, they're going to buy a lot of gold, they're going to buy a lot of silver, and when they feel like they have enough gold and silver, they'll branch out into platinum and palladium. So you get a little bit of investment demand at the same time. And generally, over long periods of time, all the precious metals move in the same direction. So to the extent that one of them gets kind of out of whack with their historic relationships with the others, that's maybe a good time to buy some. And I don't think, assuming this is a precious metals bull market that's beginning now, I think you'll do fine by buying platinum and palladium as well as gold and silver. So I don't have any specific advice for those metals relative to the other metals, but I think the category is going to do well going forward.
What about diamonds? I haven't heard a lot of chat about it, but somebody said, diamond production has been consistent and the prices are consistent because there's so much manipulation in the market to keep the supply limited. Yeah,
I don't know much about diamonds, but I've heard that too, that there's actually not a shortage of diamonds. They're not actually rare, but the De Beers Consortium holds enough off the market to keep the prices up. And in that sense, they're not the same thing as gold and silver, which actually are rare and actually do grow in supply by about 2% a year only. And, in that way, their value is guaranteed by their scarcity. Not having any firsthand knowledge of the diamond market, I wouldn't want to put diamonds in the same category as precious metals, because precious metals have very clearly understood supply characteristics. And the supply characteristics are very, very favorable for long-term accumulation. So diamonds might be a diversification, but I wouldn't be the guy to consult on them.
We'll have more with John Rubino right after the break.
Bird Dog, the ultimate tribute to the Everly Brothers and Simon & Garfunkel. Coming to Mission, White Rock, West Vancouver. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with John Rubino. John, the central banks, again, seem to be in some kind of craze mania to drive their currencies down into the ground.
This is going to be an interesting stretch here because just about all the major central banks, besides the U.S., are doing things that kind of sort of constitute the next stage of the whole QE thing. Japan is pushing its interest rates into negative territory, and apparently the majority of Japanese government bonds now trade with negative yields. In other words, you have to pay them to own their bonds. Germany's not far behind, and the ECB, the European Central Bank, meets shortly. And the expectation is that they're going to announce some kind of a new whatever it takes program where they start buying back more European bonds or push interest rates down further or do something else to increase the money supply within the Eurozone because they've had quantitative easing, in other words, extremely easy monetary policy in Europe for the past several years, and Europe is still in deflation. It has a negative inflation rate, and most of the major European economies are hardly growing at all. So they got basically nothing in return for the trillions of euros that they printed and tossed out into the banking system. And they're worried that the Eurozone, the common currency, won't survive another recession. If we have a downturn in the Eurozone starting from this point when a lot of countries have massive unemployment and other countries have unsustainable government deficits, and generally the political situation is already kind of dicey with a lot of fringe parties gaining votes because people are so dissatisfied. If you have a recession in that environment, there's going to be a lot of pressure to do things that will break up the Eurozone. In other words, a lot of fringe anti-Euro, anti-austerity parties will be elected, and so we'll get Greece writ large, where you got people coming in who are just not going to do what the Eurozone government wants them to do, and you have this ongoing battle between countries that want to run huge deficits or change their tax codes in one way or another, or generally do things that go against the Eurozone charter. And so the Eurozone could break up.
The sign of the panic about the shape of Europe is, of course, Britain's referendum on whether to remain part of the European Union.
Yeah. Britain isn't a part of the Eurozone. They still have their own currency, but they're seeing other problems with being part of the European Union. The chief one of which is immigration. You know, if somebody gets into the European Union from outside the European Union, once they're in there, they can travel wherever they want to. And so Britain is terrified of 1 million Middle Eastern immigrants showing up at the other side of the English Channel and then just crossing over into Britain. And the parties like UKIP that are arguing against that, arguing in favor of pulling out of the European Union and adopting their own immigration policies that allow them to decide who comes into the country, they're gaining a lot of traction because regular people in Britain, they're seeing all those news reports of the sexual assaults in Sweden and Germany and how you can't have public swimming pools anymore because there's a huge clash of cultures there, and so the locals aren't going to the pool anymore. You know, stuff like that is terrifying Britons, and I think for good reason. And so they're open to political ideas that are very different from what's dominated the country in the last couple of decades. And one of those is pulling out of the European Union. So they're going to have a referendum, a vote on it in July or June, I forget which.
June 23rd.
And right now it's close. So it could well happen that they vote to leave the European Union, which would be a really big deal.
Well, I can see there's security concerns, but also the Prime Minister has economic concerns. He said it would be an economic disaster to withdraw.
Yeah, that's the other side of the argument. They presumably gain a lot by being in the European Union, and they've intertwined their own regulatory system with the European Union's system. So pulling out would be kind of a logistical nightmare because they would have to figure out, all right, now we're operating under this regulatory regime, but that's the European Union. So are we still subject to that, or are we going to go back to our old way of doing it, or do we have to write completely new rules, and businesses won't know what the rules are going to be for a while, so they won't want to invest? You know, there are a lot of worst-case scenario possibilities that go with trying to pull out of an economic entity that you've been part of for a long time. And, you know, that's the other side of the story. So, I don't know. We'll see. I think chaos is really the only thing that you can point to with a high degree of certainty if you're making predictions. and it's not just Brexit, you know, not just Britain leaving the European Union. It's the possible breakup of the whole Eurozone, and it's Japan, whose economy isn't growing despite racking up the biggest government debt per capita in the history of the world, and China dropping into a credit crisis because they borrowed more money in the last 5 years than almost the whole rest of the world put together, and it just goes on. And in the U.S., you know, we're a mess in a lot of ways, but we kind of paper it over by making up numbers and reporting them, and then the media accepts those numbers and pumping lots of money into the banking system that flows into the stock market. So higher stock prices make people think things are actually okay when they're not, you know, but that'll all come to light too pretty soon. And it'll become apparent that the U.S. isn't in nearly as good a shape as it seems relative to the rest of the world right now. You know, we're going to be one of the big stories of the next couple of years at some point. And right now, everybody's distracted by the problems in other parts of the world. So we're not noticing the stuff that we're doing wrong. But that'll come to light soon enough.
Well, isn't that one of the strategies of governments in trouble? Try to create a crisis so people take their attention off it? Take their attention off the economy?
Governments like foreign enemies when they've got domestic unrest. And
I think the primary example of that was the Falklands War back in the 80s, where Argentina's economy was in collapse. So, of course, let's fight a war with Britain. Let's get the people pumped up. Because Maggie Thatcher took 3 months to get her ships there. They could have been there in 10 days.
Mm-hmm. Well, a lot of people in Britain didn't want to do that. Maggie Thatcher kind of imposed her will on the rest of the government, it sounds like. And, that actually worked out well for Britain, too, because it was good to have a foreign enemy that they could beat. And so that was great for her popularity. And so a lot of other governments around the world are maybe looking to that example and a few others and thinking, all right, who can we pick on to distract our people from the fact that we've screwed up the economy? And so that's why geopolitical crises usually go hand in hand with political crises, because the latter leads to the former in a lot of cases. So, yeah, that's another scary part of the next few years that we'll have to deal with, is a lot of people rattling a lot of sabers and maybe making some mistakes that lead to actual shooting wars. So, yeah, wherever you look, the fact that we borrowed way too much money over the last 30 years is causing us trouble now.
And it seems to me the worse the times are, the more radical the leaders are people vote for. I guess Mr. Hitler would be the primary example of that. Yeah,
Hitler was democratically elected not too long after the German hyperinflation in Weimar Germany. And, yeah, you can go through history and find numerous examples. Napoleon came to power after the hyperinflation that followed the French Revolution, and here in the U.S. we've got candidates that presumably wouldn't have done too well in previous elections that are doing real well now. And in Europe, you've got UKIP, which is a very popular party in Britain, which would have been considered extreme right-wing not too long ago. Now they're mainstream for a lot of people. In France, the right-wing National Front is the biggest vote getter. In Spain, the arguably now the most powerful party is a far-left party, because they're going to be the ones who end up forming the government, it looks like. In Portugal, a far-left government has been put into place. In Greece, you got Syriza, which was in the news last year as being the focus and the centerpiece of the Greek crisis. And the reason that these guys are being elected, or at least generating a lot of votes, is that they have a point. The old way of doing things doesn't work anymore. And so the guys who are offering new solutions sound better relative to the people who are arguing for staying the course and more of the same, because more of the same probably won't work because it's been tried for a decade or for 30 years, depending on the policy that you're talking about, and it's been proven to fail,
Well, in Canada, we've just elected a young prime minister who all the ads of the opposition said was too young to take the job, although he was only a year younger than Stephen Harper was when he ran for prime minister the first time. Age doesn't seem to be a big barrier. Ideas seem to be the thing that people are looking for.
Yeah. When the old systems don't work, people are more open to almost anything that's new, because they know that if they stay with the existing parties, they're just going to get more of the same, and they're not happy with more of the same. So that opens the door to people who want to try new things. And the problem is that it's hard for people who are just dissatisfied with the status quo to figure out which new thing will be good and which new thing will be bad. So electorates kind of try things randomly. And that's why you got parties of the right and the left doing really well, because it's not clear to a majority of the voters in most countries which way to go. And so you get the kind of chaos that we're seeing now, where parties are coming to power who have radically different perspectives from the guys in power next door, and so you can't have a coherent policy in some place like the Eurozone if you've got radical right-wing parties being elected here, radical left-wing parties being elected there, and some status quo guys in the middle trying to cut deals with everybody. And it just doesn't work. You don't get anything done, and so you just drift further and further into the abyss. And that's kind of the way the world is going. It's a very scary prospect.
Well, people like to feel that they're in control of their own country. Unfortunately, the world economy is so interlocked. If Madagascar has a recession, somehow all of us catch the cold.
Yeah, that's the downside of an interconnected world. The upside is that you get massive efficiencies in supply chains. and intellectual development. You know, with the internet has connected everybody in the world, and that's leading to a really rapid acceleration in human knowledge. Flip side of that is that, like you said, trouble in one place can metastasize really quickly, where it didn't necessarily do that 100 years ago.
If you ask the average person, for example, you know, just because of the overexposure in the media and the internet, if you ask the average guy, you know, is the murder rate up? They'll say yes. And then I point out, you know, Canada has fewer people killed than it did in 1965.
Yeah.
So, you know, again, perception versus reality.
Well, that's a media thing, because if there's a big story out there, you know, a plane crashes or a school shooting or something like that, there's a 24-hour news cycle now. It used to be that it was on the news for 15 minutes at 6 o'clock on weekdays, right? You'd go see Walter Cronkite tell you about it, and that was basically it until you read the paper the next morning. Well, now it's on Fox News 24/7 or CNN. And so when a story like that is out, it seems much bigger than it actually is. So our perception is that the world is kind of going crazy. Of course, there are parts of the world that are going crazy. You know, the Middle East is as bad as it's ever been, and Europe's got some stuff going on that I think most people there would say is not historically off the charts, because they've seen some truly crazy times there. But recent history, in terms of the last 20 years, is pretty chaotic and pretty scary. So there are places where things really are bad, but there are also a lot of other places where things are, you know, basically okay statistically, and I guess Canada's one of them. The U.S. had a huge drop in crime rates over the past 20 years. I think we're spiking again. You know, we're starting to tick back up. But we actually got less violent, even though it didn't seem like that for a long time.
Canada's former Prime Minister Stephen Harper built all these high-security prisons expecting that his new mandatory sentencing laws would lead to the need for more prisons. Those new prisons are empty. There wasn't a need for them. Canadians didn't decide to go out and commit crimes because they could stay in a nice new prison. We're getting older, and we don't go out and commit the crimes we might have if we were in our early 20s.
Yeah, a lot of it is demographics. And that I had a criminal justice class in college, and that's one of the things the guy said. You know, how do you keep a 20-year-old criminal from committing more crimes? You put him in jail until he's 35. And at 35, most people, even if they were really violent when they were young, they kind of stop doing that, you know. And so to the extent the populations are aging, we should be less violent.
Of course, you put less people in prison if you educate them and give them good jobs.
Yes, absolutely.
And I think that's cheaper than putting them in jail.
Oh, yeah. Couldn't agree more.
John, thanks a lot for chatting with us.
Sure thing, Jim.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Comments or questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.